Hey guys, welcome back to forexplatform.com YouTube channel. In today's interview, we have our new funded trader from Canada who got his funded account and also made over 7% on his funded account and got a payout from us as well. Before we start his interview, if you do not know who we are, at forexplatform.com, we provide you real capital up to $10 million. You can take the initial account size starting from $25,000 all the way up to $400,000. And on that account, you're allowed to trade Forex, stocks, indices, cryptos, and commodities. And we have two different account models. You can either take our two-step evaluation model or you can take our instant funding model. So with that being said, let's start the interview. And please, David, tell us a little bit about yourself.
Thank you very much. So my name is David Benin, and I'm known in the trading industry as Trader Ben Dave. And I'm from Ghana, but I currently live in Canada, and I'm a master's student here studying a master's in medicine.
All right. So how long have you been trading? When did you start trading?
So I started trading around March 2018. So it's been like almost 4 years, like
Yeah.
a little over 4 years now. Yeah.
Basically, I would like you to describe your trading plan to the viewers, like how you trade, what strategy do you use?
Okay, so the strategy I use is mostly where we call it geometry. So I trade geometry, and I have a modification. So geometry is not my strategy. I learned it from my mentor, and then I have like a modification of it based on all the things I've learned. And basically, I trade a ranging market as well, but I'm mostly interested in the trending market. And what I'm looking for basically is to identify the trend and then wait for the Asian session retracement. So mostly what happens is if the trend is in a downtrend, during the Asian session, you get an Asian fade to the upside, faking traders to go long. So
Okay.
when that happens and then that level falls within a supply or demand zone, based on the kind of supply and demand zones I look at, then during the Asia London or New York session, I look to go shorts. That is in a downtrend, and in an uptrend, I'm looking for an Asian fade to the downside into my demand or supply zone, and then I'll look to go long. So in simple terms, that is basically what I look at.
So do you particularly trade New York or London, or you just trade all the sessions?
So I trade all the sessions, but mostly London and New York, unless there is a very unique opportunity into Asian sessions. So sometimes FOMC happens somewhere late in the New York session. So in weeks where we have a FOMC late in the New York session, you see most volume extend into the Asian session. So in days like that, I would look to trade in the Asian session. And sometimes I do trade in the Asian session based on the pair. Like the JPY and then the Australian based pairs and then the New Zealand based pairs have good volume in the Asian session as well. So if they have good setups, I do trade in the Asian session, but my main trading sessions are the London and then the New York session.
All right, so moving on, I would like to know the background of your trading career when you started learning to trade back in 2018. Tell us about your journey, how you became profitable.
Okay, so as I said earlier, I started trading in 2018. So when we say you started trading in 2018, like it's a little tricky because no one really start trading, you start learning. So
Yeah.
it was an intense learning for like about 6 months. So like I was fortunate I didn't go through like the trial and error phase where like you go online trying to research and finding out. Like my mentor taught me like from scratch. So it was like consistent back and forth for like more than 6 months. And during that period too, I was also teaching as well. So like he was teaching me to like more or less like help him teach. So like it was more intense. And he was sitting, so he would teach me something and then sit in a class with me to see how I would teach what he had taught
All
me. And
right.
then after the session, it would be like, okay, this is what you were supposed to say. So it really helped me to learn faster because I was learning and also teaching as well. And I was learning from learning and also learning from teaching people because as you are teaching people, you get to know, okay, even though you are teaching this guy also knows that and through questions, and then you also get to learn. So it took about 6 months going into the end of 2018. I was still learning. I was still trading some small accounts, but like it's not anything significant. So things started changing for me in March 2021 when the pandemic happened. So, most countries were locked down, and
Mm-hmm.
it was a very big learning curve for me, because if you look at the chart, you see there were some crazy moves that were happening. Like you see, like the Nasdaq dropped like a very
Yeah.
big percentage. Like USD card, like you have like 1,000 people move in a session. All those moves were crazy. So like those were times like you could sit in and watch the screen for like one session, and you have like a data that would have taken like a month
Mm.
to form in a normal market to form like in a New York session. So it was like a good learning curve where you get to learn a lot of price action and see how price reacts to certain levels. So that was a very big learning curve for me. So it really made me sitting down and watching the market, because like almost everywhere in the world was locked down. So like the only thing you have to do is to stay indoors. And if you are trading or you are still learning to try and master your trading, all you have to do is to just sit and trade. And it really helped me to like gather a lot of knowledge in terms of technical analysis. So that was a very big learning curve for me. And one challenge that I was facing around that time was I didn't have a lot of money to fund my account. Like
Yeah.
if you're in if you're in Ghana, like like because of the value between the dollar and then the cedi, like if you have 1,000 cities and you fund your account, that's like 200. 200 is good if you have like exceptional skills, you could flip it, but you can't make a living of flipping account because it doesn't work all the time. Sometimes, because if you are flipping account, basically what you are doing is you are over leveraging to make more returns of your money. So you most of the times get into trouble. So that was one of the main challenges I was facing around that time. So that was like mainly part of my learning curve. Like that was where it took a turn during the pandemic. And then from there, I started getting onto, that was when FTMO and FTMO
Yes.
became way popular from that time. And that's when I jump onto like any funding opportunity I get, because I saw the funding opportunities as a means to help me to be able to have more capital to access the market. Because if you are looking to make this a career, all you need is like we are buying and selling. So if you have more capital, you could buy more things and sell more things. And your potential to make money also increases. So
So yeah, definitely 2020 was the year when the pro firm industry started booming. I literally started working for the firms back in 2019, and I saw that even with my own eyes when 2020 pandemic happened, FTMO, Funding Talent, and some other firms, they literally started gaining a lot of attraction, and a lot more traders came to know about them in 2020. Only few people knew about FTMO and some other firms before 2020, but it was very good that a lot more people could benefit from the pro firm industry, and they started to realize that in the pandemic time. So yeah, definitely. So let's move on, and please explain, the difficulties that you faced during this time, like when you were learning and becoming profitable. You were back testing. What were the difficulties that you faced?
all right. So as I said earlier, one of the main difficulties was funding. Like it was very difficult funding a very big account to trade with, and that was a very big challenge. And because of that, it was also affecting my risk management, because if you have a small capital,
Yeah.
you need to make big money, so you have to end up over leveraging. So I see very good setups, but instead of risking the normal accounts, I'm risking like almost all my accounts on a trade. So it was like back and forth. So those times the accounts that I was blowing was not because I was not getting good setup, but because the accounts I'm trading and my kind of expectation were not meeting up. So I was risking more than my accounts could take. So that was like mainly one of the main challenges, because my mentor is really good. So when it comes to like the learning aspect and the strategy aspect, he really did a good job. And because I was also doing that full time at that point, I was on the go practicing and back testing all the time. Like that was like literally all I was doing within that period. So I'll say the major and the key, there were other minor challenges, but the major and the key issue was funding, that also translated into over leveraging and then blowing accounts. So like it was mainly started with funding challenges, and then that reciprocated into over leveraging, risk management, and then blowing off accounts.
All right, that was very interested to know that. I want to know, when a trader starts his trading journey, his career, there is always a key moment in his life when either he quits or he becomes a profitable trader, or something happens to him that his trading career starts shifting. What was your key moment in your trading career?
All right. So it looks like everything is more around like funding and money. But then I was
Hmm.
trading a big account, around 100K accounts, and it was an account management. It was not my own money. Like it was not really going to affect me anyway. But losing 25K was like a very big deal because I
Yeah.
had personally I personally did not have 25K in my account, even though like according to the terms and agreement of the account I was trading, losing 20K was not going to affect me anyway. But I had not seen much like that big amount of money lost in a short period of time before. So it really affected me psychologically. I was like, this is a big deal. And that is what actually made things click for me. Okay,
Hmm.
if I can actually lose 25K with this mistake in a short period of time, that means if I'm doing the right thing, I can actually also make 25K in that short period of time. So even though that affected me negatively, it's also a good turning around point. I was like, damn, so if I'm doing the right thing, if I did the opposite of what made me lose that 25K, I can actually make 25K in that short period of time. So that was when things clicked and I started taking things more seriously, working on trying to backtest on everything because I wanted to now be able to correct everything. And if I could make 25K, if I could lose 25K in that short period of time, it means there is also the potential to also make 25K in that short period of time. So that was the main thing that turned things around for me to now take things really serious.
So yeah, losing a $25,000 in a day or 2 days, or in a short period of time can definitely affect you psychological. But because we have these firms like forexprofirm.com who are funding traders, so it really cuts the difficulty that people face when they lose either their own money or when they are managing someone else's account, because you
Yeah.
can lose all the account, all the money that you have in your funded account, and no one will say anything to you. So the pressure is always less when trading for a pro firm as compared to either trading your own capital or trading your friend's capital or any relative that he gave the money to you. So the pressure, the psychological effect are always lesser as compared to trading your own capital.
Right.
So,
Right.
so during your trading journey, how did you adjust your risk management?
All right. So for me, my understanding of risk management is different. I think risk management is more or less like it's a personal thing because like risk management is or risk in general is more about what you are willing to risk. So if I have a $10,000 account and in my mind I'm ready to risk that 10,000, or it is just a small percentage of the amount of money I have, risking everything means I'm risking 100% of my account, but
Hmm.
it is still not a big deal because I've already made that calculation that that is what I'm willing to lose. It is
Yeah,
different from someone who is trading 10,000 and that 10,000 is all the money he has. So for
exactly.
me, my understanding of risk management is before you can be able to ensure that you are taking the right risk on your account, the first thing you need to come into the market is whatever capital you have, how much of that are you willing to lose? And that
Exactly.
is also one way that is going to help you to be able to build your psychology, because the main thing that happens in the market is being in a trade and then being scared that you are going to take a loss, or sometimes when you're even in profits you are scared the trade is going to reverse and then you make nothing. But if you have in your mind that this is what I'm willing to lose, if you set a trade and you know that when price hits your stop loss, it's just a small amount that you're going to risk, your mind is at peace. And that is a key way you can master your risk management, and that
Hmm.
also translates into making sure your psychology is good. Because you see, everyone makes money trading demo. Why? Because you have no like there's no string attached because you have no emotion. So like the emotions start clicking in when you start trading your own money, and that comes in based on the money you are willing to risk. Like sometimes if I only see emotions in my trading when I start trading big accounts. The
Mm-hmm.
assistant accounts, I don't even care. Like I trade gold, Nasdaq, US 30. I don't say stop loss. I go to bed because I know that worst case scenario, what happens? I wake up and then the account is empty. If it's empty, that is money I was willing to risk anyway. It's
Mm.
not like it's like something that is very small. So that is my understanding of risk management. Go into the market with something that you are willing to risk. And once you have that mindset that this is capital you are willing to risk, that is how you'll be able to keep your mind at peace and then also trade based on what you are seeing on the chart, not what is running through your mind. So I think it's kind of a little different from how people look at risk management.
Exactly. So basically, understanding that how much money you are willing to lose is the most important thing in risk management. That is
Yeah.
why it is always recommended to place a stop loss in your trading, because if you can understand that on a particular trade you are willing to lose 500, $600, and you are placing your stop loss based on that amount, so it means that automatically it won't affect you psychological. So you, if even if you lose that trade, nothing will happen, because you already understood, you already made your mind that you can lose $500 in that trade. So if you win, you make 2x 3x amount that you risked. But if you're going to lose that amount, you are just simply going to learn what went wrong. You're going to write down your mistake, you're going to look for the next trade, and don't do the same mistake. So that is good that you have a set risk management system, and you have understood that it is good that if you can make your mind that you are willing to lose that much amount in per trade, so that won't affect you emotionally, psychologically, and ultimately it won't affect your trading journal, it won't affect your trading history.
Right. Right.
So how much time it took you to become consistent trader?
All right. So in that period, I would say like roughly 6 to 8 months. So like this is different from the conventional way for like different people because for me it was like I was doing trading like more than 12 hours a day. So like most people would look at like learn a few hours in a day. So like this 6 to 8 months could translate into 1.5 year to 2 years for the normal person that is doing like 2 3 hours a day.
All right.
For me, I was doing like more than 12 hours a day because it's like I was literally in front of the screen, like always back testing. Like I could put like the replay button and sit down and watch like five years of data
Mm-hmm.
reacting to my level. So like it was really intense. But then in terms of the time I spent doing this, it is between like 6 to 8 months that I started seeing consistent profits. Yeah.
All right. So, do you follow any trading routine that has made you profitable, and you still follow that routine? Do you have a certain rules that you do in your daily life to trade?
Okay. So my kind of approach is not really of a daily routine. I follow a weekly routine.
Okay.
So I'm not a day trader, I'm not a scalper, I'm not a swing trader. I trade based on the opportunity that's available in the market. If
Yeah.
there's a scalping opportunity, I go for it. If there's a day trading opportunity, I go for it. If there's a swing opportunity, I go for it. But I follow a weekly routine. So the weekly routine I follow is based on my understanding of the market. So I mostly try to avoid trading Mondays and Fridays, mostly because of there's a whole lot of factors why I try to avoid trading Mondays on Friday. It's not because
Okay.
I don't trade
Hmm.
Mondays on Friday. It's just like the way I try to avoid trading Asian session, but I still trade Asian session when there is a unique opportunity. That's the same way I try to avoid trading Monday and Friday. Is based on my understanding of the weekly cycle of the market. So basically, what happens is on a normal week, all things being equal, what happens is there is a major reversal that takes place Wednesday, and when that Wednesday reversal continues through to Wednesday, Thursday, Friday, and another reversal takes place on Wednesday. But on Friday, we have what we call fake reversals. So if you have the markets moving from Wednesday all the way down, Friday, you have like all this big push, mostly after the New York section going into the opposite direction. So I try to avoid that. But if I've already taken profit on my Wednesday position, sometimes I trade on Friday. And Monday, what happens is, you see, when most traders take a break on Friday, and when the market open, everybody is rushing into the trades. Everybody sits for like 2 days, not doing anything. And then when the market open, people start taking positions anyhow. And you see that you might be in the best position to have, because you have data on traders and you would know that, I don't know, maybe you might confirm it. Most people would lose their accounts or fail their accounts on Monday and Friday, because on Monday,
Yes.
yes, so you will be able to confirm that. I don't have data on that, but this is based on how my strategy and how I see the market. So based on all this, I try to avoid trading on Mondays and then Fridays, and mostly I do my analysis for the week on Tuesday. So for my strategy, I see Tuesday as a formation day. So based on how Tuesday, the certain levels or the highs and lows of the week is created on Tuesday, that will also help me to determine what I will do on Wednesday going into Thursday. And mostly Thursdays, I look to take swing positions. If the reversal takes place on Wednesday, I take a swing position on Wednesday, looking to take profit on the next Wednesday. So my routine is more of like a weekly routine that is now subdivided based on the opportunities that are available in the market. Yeah.
Okay, that was very, very good to know that. I read a quote somewhere that money is made in trading during waiting instead of trading. Basically, when you start waiting for the right opportunity and you learn the importance of the patience when you wait, that is where the actual money is made. And that is the only way I think is, to succeed. There are so many traders who are just scalping, who are day trading, and most of them, if they don't see any opportunity, they just force themselves to take the trades. But if you
Right.
just wait for the right opportunities, you know that you are only going to take the trade when there is an opportunity, no matter if it takes 2 days or 3 days or 4 days to arrive. So you will automatically won't force yourself to pick up any random trade, which ultimately
Right.
will not lose you money.
Right.
So tell me, what would you recommend to someone who is starting with us here at forexprofirm.com, or who is starting trading in general?
Okay, so what I would say is you need to take it slow. So from I've taken so many challenges, I've passed so much challenges with your firm and other firms as well. And most people focus on the wrong thing. Most people would look for pro firms that has like no minimum trading days, like how fast you can pass the challenge. What I think you should do is you should focus on more on how much did you pay to get the account and how much money do you have to risk. That is the major important you are getting from funded account. So you should focus on taking it slow to now build your profit gradually. Because
Yeah.
you will see one thing with trading funded accounts is once you go into drawdown, that might be your downfall. You might not be able
Mm.
to recover again. But if you take it slow and you're able to build a little profits, and then you now risk your profit instead of your actual accounts, that takes a lot of like issues with psychological issues, risk management, and it makes you to be able to grow gradually. That is with trading funded account. Take it slow. And once you take it slow, after you go through and you build some profit and you are now risking your profits. In that case, worst case scenario, you lose all your profit and you start from where you started. But if you go into drawdown, you might not be able to recover again. And for new traders, you should focus on mastering your skill. When you start,
Yeah.
focus less on the profits. Look at going through, like there are so many like uh, good traders out there. Find one that you think the strategy he or she is using is something that you relate to, and then make sure you learn and understand the system, and also try to modify it to something that suits you. And once you're able to do that and you have a good understanding and you can backtest and understand the strategy, all you need is capital and risk management and you'll be good. Right.
Yeah, exactly. Having the understanding that you do not have to rush to complete the challenges, because you get 30 days, to pass the phase one. Now, it looks harder, and a lot more people think that they won't be able to pass the challenge in 30 days. But from my experience of working for these prop firms, for the past 3.5 years, I can literally tell you that this 30-day time, it's a lot of time. So 30 days is a lot of time. Another thing, when you will start trading the challenges, then it becomes easier if you can find one or two or three good trades. It becomes very, very easy, because once you are in profit and you start with a good two or three trades that make you profits at the very starting of your challenge, that ultimately makes you up 3-4%, and you can use that amount to make the remaining 5-6% of the objective to complete the phase one. So that's very great, that having the understanding of not rushing the process, taking your time, taking it slow to become a funded trader, to become profitable trader, to pass the evaluation, can help you in your trading for a very long period of time. So I would like to wrap this interview now, and I want to thank you, David, for being here, for giving us the interview, for talking about how you became profitable, what were the difficulties that you faced, how you lost $25,000 at one point, but you were able to master your skill, master the risk management, and you were able to become profitable trader after that. Because a lot of traders, they just quit when they lose that much amount in just a very short period of time. But you did not quit. You continued learning, you continued backtesting, and that helped you not only become profitable for a long period of time, but you also now are a funded trader. So guys, if you want to know more about us, check out our website. We have added the link in description, and let us know what are your thoughts in the comment section, and we will get back to you with the replies. So thank you again. Have a good day. Bye for now. Peace out.